earnings. Now, in this case, when talk about what we refer as earnings, this is what in other terms we refer to as the profit. Now, in this case, we do have various categories of profit, or basically various categories of earnings, which you need to know of before now we can proceed and basically look on the other subtopics. So the first type of profit or earnings is what is known as interest. That is earnings before interest, tax, depreciation, and amortization. That is earnings, which is before interest. Interest is what in other terms referred to as the finance cost, tax, depreciation, and amortization meaning that this is now the profit of the company, which is computed after deducting all the expenses, but we exclude the interest, we exclude tax, we exclude depreciation, and also we exclude what amortization. This particular profit here, or this particular earnings, it is very useful in terms of evaluating what we refer as the company's performance. Means that if at all then we intend to measure the performance of a company in respect now to the other companies, so basically we want to do what we refer as the cross-sectional analysis, that is comparing the performance of the company with the other companies. Then this is the profit, or basically the earnings, which is recommended. The reason why we say this profit is the one which is recommended is because this particular profit here will be excluding depreciation and also amortization, which is based on the accounting policy adopted by what? By an entity. Remember, one of the challenges which is faced by the companies whenever a comparison is to be done with the other companies is as a result of entities using different accounting policies. But once now we have excluded depreciation and also amortization, then in such a case we can then be able to perform what we refer as cross-sectional analysis in terms of comparing the performance of the company with other companies. And that's why we have said this particular first category of profit or earnings is very, very important in terms of comparing the performance of the company. Now, the other category of earnings, or the other category of profit, is what we refer to as the operating profit, or what in other terms we refer to as operating earnings. And this operating earnings, or the operating profit, this is what in other terms we refer to as the profit before interest and tax. For this particular component, very what we refer is useful in companies profit, companies BDT. This is because this particular profit here, it has taken into account most of the component of cost, or most of the component of what? Of the expenses, now excluding interest, what in other terms we refer to as the finance cost. Then the other component of or the other category of interest which we have is what is known as the net income. Now, the net income, this is what in other terms we refer to as the profit after tax, or what in other terms we refer to as the profit for the year, for the year. So therefore, what you need to note is that when talk about now the net, are referring to the profit tax, or the profit for the year, talking of one and the same. thing. Now, this particular earnings here, or this particular profit here, is useful or is used by the company whenever a company is computing the earning per share. So mean that whenever now the earning per share is to be computed, that is EPS, then in our case we use this particular profit. And because that is our second subtopic to cover, we are going to look on how we compute the earning per share using now the net income. And therefore what you need to note is that the net income here is the profit for the year, or basically the profit of the company after tax. So therefore those are the three main categories of earnings, or the three main categories of profits which definitely you need to be aware of.